The United States debt is now $38 trillion and it is increasing by 2 trillion a year. I think it's almost impossible to comprehend how high that number is and how quickly it's growing. But you know what? Whether it's hard for us to comprehend or not, it impacts all of us as investors, as people, as United States citizens. So I want to talk today a bit about what tools are at our disposal to protect our wealth.
Welcome to the Secrets to Abundant Living podcast. Your guide on this journey is Amy Sylvis, ready to unlock the keys to a life of true abundance. We're diving into everything from financial freedom and optimal health to meaningful relationships, geographic freedom, and everything in between. It's about creating a life rich in experiences, purpose, and joy. Get ready for empowering conversations, expert insights, and real-life stories that inspire you to live abundantly. If you're ready for the secrets to an abundant life, hit that subscribe button now, and let's get started.
Welcome, everyone, to the Secrets to Abundant Living podcast. My name is Amy Sylvis. I am your host. I'm also the founder and CEO of Sylvis Capital, where we connect folks to hands-off real estate investment opportunities. And I'm coming to you here in the back half of October of 2025. And raise your hand if you're shocked. The national debt has not decreased. It is growing exponentially. And there was a whole bunch of talk about it at the beginning of 25. But for those of us who study the monetary system and who have been followers of the podcast for a while, we know increasing national debt is just an inevitable factor of our monetary system. So studying monetary history is not just for geeks and nerds like me, but it is something that I think is imperative for all of us to understand to protect our wealth. And I'm so passionate about it. I want to educate you all a bit more about this. For those of you who have been following the podcast for quite a while, we talked about gold and silver specifically about a little more than a year ago, probably closer to a year and a half ago. And things have changed a bit in the past year and a half in terms of price activity, but we'll get more into that. What I really want us to understand, I think for all of us, myself included, this kind of state of our national debt can feel really overwhelming. And hey, some people will say it's not even a big deal that the debt is increasing. It's really, a nothing burger. But I'm a very conservative investor. I like to protect my wealth with anything I can. And I think putting systems and processes and investments in place, as it were, can really help me and my husband Joel, protect our wealth from what seems to be inevitable high inflation coming down the pipeline. So let's dig a little bit more into that. Again, as always, I really need to say this. This is just education and me talking about what I do. This isn't investment advice. You all are very smart and sophisticated. So take what I say, do some research, make a decision based on your own risk tolerance and time horizon. So how do we reduce the national debt? What tools are at our government's disposal? Well, the great Bruce Fraser. So some of you are part of our investment club and you heard Bruce Fraser, my business partner, talk about this last week, or you heard our podcast with Bruce just about a year ago. But essentially what he talked about is, eliminating the national debt, that's kind of pie in the sky, but can we reduce the national debt, or can we even reduce its trajectory of growth, its rate of growth? There are a few ways we can do that. Obviously, one is we can reduce government spending. Really, really tough to do because, quite frankly, the largest expenses for our government spending are entitlements. There's Social Security and Medicare and Medicaid. It's going to be really, really tough to cut those expenditures and not really, really hurt the most vulnerable people in society. Or if you're politically minded, it's not politically astute to do that because those people vote and you want to make sure to maintain those votes. So Elon Musk, love him or hate him, no commentary on my end. He tried to cut some spending. Some of it was successful, but to really make an impact, we have to look at where the majority of our money is going, and it is defense spending. So some may argue maybe we should cut some of that. That's not a conversation for this podcast, but there's also Medicare, Medicaid, and Social Security, which, hey, I think we're going to be in for a really hard time if we do that. So cutting spending, as hard as it is to say, probably not practically or realistically on the table. Now, we can argue, should it be? I'm not here to talk about politics and what should be done. I'm talking about what is likely, what is feasible, so we as investors can make the best decision possible. Okay, so the first one is cutting spending, probably off the table. The second one is defaulting on our debt. We could just say, hey, guess what? We're just not going to pay. We're just going to default on our debt. That would have some pretty wild consequences, both domestically and on the international stage. So very likely not going to happen. There are some conversations about, well, I'm not going to go into it because it really gets into just kind of conjecture, and that's not really helpful. But there may be some sleights of hand that may allow us to put our debt in some other denominated assets. Suffice it to say, our government isn't going to outright default on our national debt. So that's out of the picture. Another option is to grow our GDP faster than the rate of increase of our national debt. That's a tough one to do. We are a mature economy. We're not an emerging market. So we'd have to have some pretty robust economic growth and GDP to outpace the growth of our national debt. That is one way to decrease it. So, it'd be cool. I think all of us would love our economy to grow really quickly, and especially at a pace that outpaces the growth of the national debt, but highly unlikely. Okay, so GDP growth outpacing the growth of the national debt, outright default, cutting expenses, cutting our annual budget so we're not increasing the national debt as much. Another idea is to just inflate the debt away. What does that mean? That means create inflation such that the national debt becomes, in real terms, not nominal terms, but real terms in terms of inflation, it actually goes down in those real terms. So if we have inflation that's quite high, that isn't outright default per se, but it kind of is. But it's more silent, it's more covert, it's less obvious. So, and of course, as we all know, inflation, especially high inflation, is a regressive tax. It hurts everybody, let's be very clear, but it hurts the poor and those on fixed incomes way, way worse than the middle class and the rich. In fact, inflation helps some rich folks, especially those that have hard assets. We'll talk a little bit more about that later in this episode. Our last option is increasing taxes. And we all know how politically popular it is to raise taxes. So of these 5 options, raising taxes, kind of covertly defaulting on the debt through high inflation, increasing GDP, cutting expenses, and outright default, which do you think are the most likely paths for our government to take? To me, it's quite obvious. My dear business partner, friend Bruce Fraser, agrees. The government's going to inflate the debt away. So what does that mean to me and you? Where to begin? You've heard me talk about this, so I'm trying to summarize it in a quick way because truly I could talk about this for hours. We all have lived through quite high inflation, higher inflation than what the government reported during COVID. From 2020 to 2022, prices went up and they have not come down, right? It's when they talk about inflation, that's the rate of increase. So there's been a high increase in prices across the board, and it's hurt folks. It's especially hurt the folks that are on the lower echelons of economic society, as well as those who are on fixed incomes. And the rate at which inflation will have to continue to rise, or the level where it will grow and sustain to inflate the debt away, I think it's going to catch a lot of folks off guard, but not us. And look, it's not going to be a good time for anybody, but we do have several tools in our tool belt to preserve our purchasing power. And that's really what it's all about, in my opinion. Again, education, not financial advice. What I'm going to do, or what I am doing, not financial advice. But those who own hard assets, especially those who own hard assets that cash flow, tend to do a bit better at preserving purchasing power. So, what does purchasing power mean? It's essentially what you can get with the money that you have. $100 today does not buy the same as $100 during COVID 5, 6 years ago, right? It just doesn't. So, you understand purchasing power. So, how do we maintain purchasing power even when inflation is high? Hard assets historically are what gets us through. So there's a difference between growing your wealth and maintaining your wealth. I'm truly talking about preserving your wealth, preserving your purchasing power right now. And if you all haven't paid attention to what's going on in the gold and silver market, it's just one example of kind of the alarm bells going off. I don't know if you all have paid attention. Again, if you listen to my podcast a year and a half ago, we talked about it. And we'll go ahead and link it here so you can listen to it. But what's happened in particularly the gold market, silver almost always lags. That's a whole other story, is astounding. Have you ever thought about having multiple streams of income? Instead of relying on just one stream of income where you're trading your time for money, how would you like to free up more of your time and live a more abundant life? As a listener of the show, you're invited to attend one of our upcoming trainings where I'll give you an inside look into how you can add passive income and get all the other perks of recession-resistant real estate investing without the headaches of being a landlord. I'll also be sharing some hidden mistakes to avoid and the criteria I personally look for when evaluating potential investment opportunities. To reserve your seat for free, go to sylviscapital.com/webinar. Again, that special link to reserve your seat for free is sylviscapital.com/webinar. I look forward to seeing you on the training. And now back to the show. During our gold and silver episode, gold was approximately at $2,000 an ounce. It is now today, let's take a look, $4,370 an ounce. So has more than doubled in 18 months. A lot of that recent move has just been in the past few months, but gold tends to follow M2 currency supply. So M2 currency supply is something that you can look up. Some people call it M2 money supply. The dollar is not money. It does not maintain purchasing power over long periods of time, but we're going to nerd out on that. But anyway, it's not surprising for those of us who study the monetary system and who understand how gold tracks the currency supply in the United States to see these types of moves. Gold often also understands what's happening or what may happen in the future. So, hey, bullion, actual bullion, not paper representation, but actual gold and silver bullion can be a nice hedge, historically has been a nice hedge against inflation. So is that part of my husband and my portfolio? Absolutely. Have we sold? Absolutely not. There's a reason why governments decide to hoard this stuff, and they're continuing to hoard it. It's not because they've got a whole bunch of money and they're not quite sure what to do with it. It still plays a role in the current monetary system, even if it's not overtly, and likely will have some sort of role in some way in a monetary reset if that's what's coming. If the world's reserve currency, which is the dollar, happens to go into really high inflation. So, conjecture on my part. Don't listen to me. Do your own research. I'm just talking about how I'm thinking through things and giving education. But there is a big value of actually having the physical metals as opposed to the paper representations. The paper representations have a whole bunch of flaws in them. Namely, they can be naked shorted. They don't always have the metals. SLV and GLD don't always have the metals that they claim that they have, especially if there are big moves in the market. So I don't hold any of my metals at home. They're all in armed security storage. But just something that I like to talk about because we hear ridiculous things. I think Alan Greenspan said that gold was a barbarous relic. Sure, Mr. Greenspan. That's why smart countries like China and India continue to accumulate, right? Because it's that barbarous relic. I'm feeling a little sassy today, y'all. I'm not going to lie. And the other thing that I am doing to prepare is owning real estate, whether it is commercial, whether it's residential. historically speaking, if inflation is high, hard assets like real estate also can keep up with inflation. I prefer those that cash flow. So that cash flow can also keep up with inflation. Now, expenses are going to go up for all of us, right? So it's not like, oh, we own hard assets and, we're going to be shielded from inflation. The goal really is to protect what we've worked so hard to earn and preserve that purchasing power and looking back into history to understand what historically has done well in times like this. So I think it was Winston Churchill who said, the further into history you look, the further into the future you see. Yeah, it's worth studying these things. I think it is, especially because the national debt is not stopping. It's hard for us to even comprehend what a $2 trillion a year increase means. I think it's even higher. I think I may have actually been wrong about the $2 trillion. Okay, so we are now on the Fed website, the St. Louis Fed, looking at the national debt, and you can see it is increasing at an increasing rate. So the $2 trillion a year likely going to continue to grow. Interest on the national debt is now, I think, our third largest annual expense for our government. Y'all, we can be doom and gloom. We can be there, we can be upsetty spaghetti. I get it. But we really can't control the monetary system in which we exist in the United States or in the world, quite frankly. We don't really have a ton of control over what our politicians do. I'd like to say that we do. What we can do is point our fingers at ourselves and say, given the cards that we have been dealt, what are we going to do? What is that going to look like? And obviously, I'm quite pleased with how my hard asset investments have gone, gold and silver, both of them. I'm not telling you all to buy them, but all of this truly comes at no shock to me because of the research I've done, understanding what the monetary system is all about and mathematically how these things tend to end. And I hope y'all are busy. I totally get it, but I truly hope that you'll utilize some of the resources we have in the show notes. There are some books, there are some videos. I hope that you'll pay attention to those, dive deep as you're able in your busy life to set you and your family up to weather the storm of inflation and come out on the other side. Because look, this is a podcast about abundance. This isn't just about us protecting ourselves. I think about how I'm going to take care of my family, charities that I care about, my church community. I want my cup to overflow and, of course, help my family. But this is bigger than that. We dream bigger on this podcast. We care about not just ourselves, but our greater community in which we exist. And of course, those are the folks that are the most vulnerable. So in my opinion, understanding the monetary system in which we operate gives us our best chance to make these bets and make sure that we not only survive, but thrive so we can care for ourselves and others. Okay. I hope you feel empowered. Truly, that was my goal. Do me a huge favor. If you think this podcast was helpful, send it to someone. Help them out. It's not too long. They can listen at 2x speed. But let's share. Let's help each other. Let's spread the word and let's live abundantly. Looking forward to seeing you all in the next episode. Thanks for stopping by. Bye for now.
Thank you for joining us on another episode of the Secrets to Abundant Living podcast. We hope you found inspiration and valuable insights that will empower you on your journey towards abundance. If you enjoyed today's episode, don't forget to subscribe, rate, and leave a review. Your feedback means the world to us, and it helps others discover the secrets to an abundant life too. Stay connected with us on LinkedIn, Amy Sylvis. Keep striving for your goals, nurturing your relationships, and embracing the adventure that is life. Until next time, we wish you an abundantly fulfilling day.